So we are all welcome to class again. Tonight we are going to be uh, discussing budgeting and budgetary control. We're going to pick up from where we stopped in the last class. And in the last class, we were able to um, solve questions on production budgets, talking about issues of material purchase budgets, material usage budgets, labor budgets. Then we concluded by giving an assignment, though, even though we'll talk about that assignment. And in the last class, that was on Saturday, we solved a question on vaccine, the COVID, and Zithromas. I don't know if anyone have gone back to it again to solve it. How many of you have attempted it again on your own? Yes, on your own, you've decided to solve it again. You've set an examination condition for yourself that let me solve it again. Okay, Mr. Moshood Adigun, fine. Any other person? I need to always do this audit. Yes, do an audit on you. It's not by joining class. It's not sufficient to just join the class. Yes.
Please, tell me the question again. I'm going to do it after the class because I didn't have the question. Question what and what?
I forwarded it on the platform. We solved it on Saturday, man. You were not part of the class on Saturday, man.
I was there.
Yes, that was the question we solved, man.
Okay, the remaining that you say we should solve.
No, just that question. Even the fact that we've solved it in class, I said everyone should go and try it again. You can try it again on your own. Yes. So anything we do in class, man, you need to do it again on your own. Solve it again on your own. Okay. Yes. That is the way to learn. Yes. Okay, so if my lecturer should teach me anything, even those examples they used to give me, I'll make sure I still solve it again. Yes. That is how to learn. Yes. Because what I've shown you in class, you won't just assume you've known it. It is when you use your biro and paper. Yes. So that is how to overcome these exams, man, which is very key. Anything you see, you solve. That is Ican for you. So if you know you don't have time to solve, you have to create time because this thing needs time. I will not lie to you. It needs time. Just like somebody in the seminary school. You are consecrated. Yes. See, when you pass this exam before you are free. So you are very close. Everything you are thinking is Ican. That is how it works. So you give it all it takes. So if you give it your partial time, you get partial results. So give it all it takes. So that question, please, everybody, solve it again. Yes, it will increase your understanding. So the one we're going to solve today again, after the class, create time to solve it again. So that is the idea. That is the idea. So for tonight, we're going to solve this question, May 2015. Then I will leave you with the other two questions to go and solve. Though this is an online class, but for my own class, I always push you as if it's a physical class because there is no difference between physical and online. The fact that it is online, every impact I can make in the physical, I should also make it in the online platform likewise. So it now depends on your reaction to my own actions. So that is the paramount thing. So in the physical class, some people will go from 7 o'clock on Saturday and go back home 8 o'clock in the evening. But to me, online class, at least, it's more convenient rather than entering transport to one place, especially those of you in Lagos. So let's look at May 2. Madam Ruth, you're laughing. It's true now. Those of you in Lagos, before you move to Alaba and get to Oshodi, even though I don't know Lagos. So you move to from Beggar, you move to Victoria Island, and you now stay in one hold up for 20 minutes. 20 minutes is too small, right? All right. So can somebody read this question? It's on the WhatsApp platform. You can check it in case the one on the screen is not clear. May 215. Ozigbondu. Anybody to read? Madam Ruth, your camera is on. Hope you know. So anybody to read?
Yeah, I'm here. Good evening.
All right, sir.
Ozigbondu. Question 2. Ozigbondu Nigeria Limited is a company that is into buying and selling of plastic containers. The company is financed by a capital of 15 million naira, inclusive of reserves in a mix of 30% and 70% of debt and equity, respectively. The company has been in trading business for the past 6 years and has consistently adhered to its corporate policy on sales, purchases, and inventory management. The company's policy on sale is to ensure that sales are collected as follows. I, cash sales is 40% of the monthly sales. II, the balance of the month sales to be collected in the month following sales. The policy on purchases is in agreement with the supplier's policy, which is to pay for all supplies in the month following. The company's stock policy is to reserve 30% of the month's purchases as closing inventory. The following information is available for the 5 years, 2010 to 2014. Monthly sales, monthly purchases, monthly salaries, monthly rent, monthly cash expenses, all figures assumed to be correct. Additional information. The company purchased a motor vehicle in July 2013, which was paid for in September 2013. The cost of the motor vehicle was 5 million. Annual depreciation for the motor vehicle is 20%. The cash balance as at 31st December 2011 was 4 million. The company's salaries, rent, expenses were made in the month they were due. Required. Prepare a profitability statement for 2012, 2013, and 2014. Prepare a cash flow statement for 2012, 2013, and 2014. Determine and comment on the liquidity ratio, that is current ratio for 2014. Compute the gearing ratio. Thank you.
All right. Thank you, sir. You know, I've missed you in this class.
Sorry, sir.
You've not been coming to class.
Yes, sir. I'm so sorry, sir.
Yeah, on the mountains are praying for us.
I've come down from mountain since. It's just training and seminar.
Okay, sir. It will be fine, sir.
Yeah.
So, looking at this question, to some of us, this question is not new to us. We've treated it some times ago, but I want to use this as a foundation, yes, to link up with the other two questions that are forwarded to the platform. Yes. So that is why I'm starting with this. That is why I'm starting with this. So that by the time we understand this, you move to the next one, then you now move to the most recent one, which was tested in the last diet. At least you will not say it was tested last diet and you will not know it. They can still shock you and bring something like that. You know, sometimes what you take for granted is what you will now see in the exam hall. So to me, anything we need to do to pass this exam, the knowledge we need to get, we need to get it without leaving anything aside. So this is very important. This is very important. So from this question, the question states that we should prepare monthly budget. Excuse me. So the question wants us to prepare profitability statements, prepare cash flow statements, and calculate and determine and comment on liquidity ratio, that is the current ratio for 2014, and compute the gearing ratio. So this question, there are things we must note from the beginning. If you read from beginning, that Ozubundu Nigeria Limited is a company that is into buying and selling of plastic containers, and the company is financed by capital of what? Of 15 million, inclusive of reserves, in a mix of what? 30 and 70% of debt and equity, respectively. So what does this signify from your knowledge of financial management? What does this signify? What does this signify? Yes, ma'am.
This shows that the capital structure of the company is 15 million, abi? And the debt is how many percent?
The debt is 30% and the equity is 70%. So the overall capital is 15 million. But in
So
that
that
15
15
million,
million,
yes,
we are going to calculate the 30% of it for debt, and the 70% will be the equity capital.
okay, fine. So that is that. So the company has been in trading business for the past 6 years and has consistently adhered to its corporate policy on sales. The question you ask yourself, what are the corporate policy on sales, purchases, and inventory management? What are the corporate policy of these in relation to the company? Now, we have another paragraph that the company's policy on sales is to ensure that the sales are collected as follows. Now, they are now presenting the policy to you. So it is now your duty to analyze the policy with rapt attention. Now, number one policy is that what? Cash sales is 40% of the monthly sales. Cash sales is 40% of the monthly sales. 40% of the monthly sales. What is the interpretation of this? So that when you're in the exam hall and you see something like this, you should be able to interpret without any much ado. What is the interpretation of this? Can anybody speak? You know, you are the one writing the exam. I'm not here to show my knowledge. You understand? We are here to build ourselves. So what is interpretation of cash sales of 40%? Cash sales is 40% of the monthly sales.
Hello, sir.
It means that 60% of the sales is credit sales, while 40% is cash sales.
Yes. So it means if we have 100,000 as our monthly sales for January, and the company's policy says that 40% of the monthly sales is cash, the implication is that 60% will be what? Credit. Will be credit sales. So you will not expect the examiner to tell you everything. They want you to also think, because some students will now say, okay, what about the 60%? You have to interpret to yourself that if cash sales is 40%, the remaining 60% is what? Is credit sales. Credit sales. So the next point is this. I'm just analyzing this so that when we go to the figures, we'll know what to do per time. The balance of the month sales is to be collected in the month following sales. The balance of the month sales is to be collected in the month following what? Sales. What is the interpretation of this?
The balance, the 60% is going to be collected. If it was February sales, the 60% will be collected in March, while the 40% will be collected in February as cash sales.
Okay. It means, just as you said, that the 60% of the credit sales in February will be due for collection in which
In the
month?
month of March.
In the month of March. Fine. Very good. So the balance of the month sales is to be collected in the month following sales. That is fine. So the next statement is that what? The policy on purchases is in agreement with the supplier's policy. The question you have to ask yourself, what is what is the supplier's policy? That the policy on purchases is in agreement with the supplier's policy, which is to pay for all supplies in the months following. In the month following. It means if we should make purchase in the month of February, the balance of purchase or the whole purchase, you're having a 1 month credit. You're having 1 month credit. It means the purchase in February will be due for payment in which month? In March. Because the statement says the policy on purchases is in agreement with the supplier's policy, which is to pay for all. Now they are not telling us that part of it is paid in the current month and the balance is paid, but all supplies is to be paid in the month following. Now, the company's stock policy is to reserve 30% of the month purchases. It means you have a lot of work to do. You must identify the month purchase. 30% of what you purchase this month will be your closing inventory. So the company's stock policy is to reserve 30% of the month's purchase as what? As closing inventory. So if you should purchase a goods worth 100,000 naira in the month of February, what will be your closing inventory in the month of February? 30% of 100,000 will be
30,000.
30,000. So now, the following information is available for the 5 years, 210 to what? To 214. This is very confusing. Why is it confusing? It's a simple statement. But if you don't look at your data, because you're in the examination hall, you would think this information are for each year, isn't it? You think 3.4 is for each year because you might not look at this information by the side. You can see monthly sales, and they are now putting 210 monthly purchase. So some students can go ahead to use 3,400,000 as the whole sales for 210. Some students can still go ahead to use 3.6, but it is clearly put here that monthly sales for 210 is what? 3,400,000. What is the interpretation of this? It means in the month of January, your sales is assumed to be 3,400,000. In the month of February, your sales is assumed to be what? 3,400,000. In the month of March, your sales is assumed to be 3,400,000 for 210 up till what? To December. Monthly purchase, same thing, evenly spread for each month to be 2 million for 210. Monthly salaries, same. Monthly rent, same. For each month of the year that is concerned, the figures are what are same. Monthly cash expenses, same. So the question goes further to say that what? The company purchased a motor vehicle in July 2013. Take note. July is how many months to December?
6 months.
6 months. The company purchased a motor vehicle in July 2013, which was paid for in September 2013. The cost of the motor vehicle was what? Was 5 million. Was 5 million. So if you are to calculate depreciation, that is the annual depreciation for the motor vehicle is 20%. How are you going to prorate the depreciation value for the first year, which is 213? How are you going to prorate it?
You divide it into 2 or 6/12 times the 20%.
Okay, fine. Multiply by, because annual depreciation for the motor vehicle is 20%. So it means it's a constant value, straight line. So 20% of 5 million multiplied by 6/12, if you want to do it, or multiply by 1/2, you get the half year depreciation for what? For 213.
Okay.
For 213. So for 214, the depreciation will be a full year charge. A full year charge, because it will be utilized, the motor vehicle will be utilized for the whole period, for the whole 12-month period. For the whole 12-month period. So we have a cash balance brought forward. The cash balance as at 31st December 2011 was what? Was what? 4 million. So this cash balance as at 31st December 2011 we serve as what in 212? We serve as what in 212?
Opening balance.
Opening balance.
Fine. It will serve as opening cash balance in 2012. Nobody will tell you that. So you, from the statement, you're expected to know. So the company's salaries, rent, and expenses were paid in the months they were due. It means these are not credit expense. They are cash expense that were paid as at when they were due. So now, for us to prepare our profitability statement, what are we going to do? What are the details we need to prepare profitability statements? You know, we prepare profitability statement in the last question.
Sales.
So we need to look at our sales, fine. What again?
Purchases, then the closing inventory and sales. Okay, and
All the expenses. All the expenses.
All right, fine, fine. So we are going to present that, to see how that will look like. We're going to present that to see
Please, sir, let me ask a question, sir.
Ask, ma.
Hello, sir.
I can hear you, ma.
In this case, now we are seeing 2010, 2011, 2012, 2013, and 14. I don't understand. And they are now giving monthly sales
Yes.
for the monthly purchases.
Yes. We are going to understand it together now, ma.
So how are we going to?
So just follow.
Okay, sir. Thank you.
Yes, ma. So the question says that what prepare a profitability statement for which year? 2012, 2013, and 2014. Some students will go to the hall. They will go and start from 2010. You are wasting your time. The examiner will go to, or the marker will go to what concerns the marking scheme. 2012, 2013, 2014. Because you don't even have time to start doing extra work. Yes. So you work and answer question in a smart way. Yes. There are some questions that will require you to prepare from 210, 214, but you must be very fast in doing that because you might need some figures in the previous years that you need to bring into the current year. So, but in this case, it is very clear that prepare profitability statement for 212, 213, and 214 because some students might now go to the hall and say, these figures of 210 and 211, they are very important. If they are not important, why would they bring it in? So to determine the profitability statement, you start with your heading. Your heading is very important because you are a professional accountant. Yes. So the only thing is that you are still trying to get the certificate, but in no time from now, you will get it. So, and your presentation matters likewise. So your heading is very important. So what will be our heading? We will write. In the last diet, I asked what is the meaning of this name, Ozigbondu. And I gave me the meaning. So Ozigbondu Nigeria Limited profitability statement. Profitability statement. For which year now? For 2012, for 2013, and what? And 2014. And 2014. And 2014. So the profitability statements for years and not for what? And not for months. For the years and not for what? And not for months. Because the data given is for their monthly information. Their monthly information. So what are we going to do? 212, 213, 214. So going to the question, you have monthly sales, right? For 212, you have monthly sales. For you to get the annual sales, what are you going to do? Let me carry my calculator. For you to get the annual sales, what are you going to do? Yes. Very fast.
You multiply it by 12. 12 months
You multiply the monthly sales
by 12.
by 12. I believe everybody have calculator. It's not 2 weeks to the exam. You'll be running to look for calculator. So everything you need for the exam, you need to start using them now. So if the battery is faulty, you go and change the battery. You know, some students can be so very diligent that till when it is few hours to the exams, they will discover that something is wrong. So you must always be on guard and not allow some unnecessary things obstruct your good success. So you should have your calculator by now. Yes. So for us to get our annual sales for 212, what are we going to do?
We'll multiply 3.4 by 12 to give us 40,800,000.
What would that give us?
40,800,000. 40,800,000.
40,800,000. Okay. It's 40,800,000. That is let's see.
Sir, that's for 2010.
I'm still quiet. I'm still quiet.
My glasses, I didn't need my glasses. I just saw it now. Okay.
That's why I'm still quiet.
4.2. It's 50,400,000, sir.
Okay,
For
ma'am.
2012.
So I was quiet. I'm
I'm
expecting
sorry, I
objective.
didn't wear my glasses. And this thing is not very clear. So,
Ma, he's on the WhatsApp group, ma.
sir, I know. I have to minimize my phone. That's why I didn't do that. I'll check
Okay.
it.
Yes. So it's what it implies that some of us are not pressing our calculator, or you are just trying to also confirm.
We are pressing.
Okay, ma. So I was expecting different answers, ma, so that I will know that.
400,000. 50
So we're
million.
preparing profitability statements. So we need to work in other way to get our gross profits, then our net profits. So the first item will be what? Our sales. So
50
for
million.
212, it will be what? 50 million 400.
400,000.
So for 213, it will be what? For 213, that is 4,800,000.
57,600,000.
600,000.
57,600,000.
57,600,000. And for 214, it will be what?
So,
86,400,000.
86,400,000. Fine. So what we want to do is that we want to get our cost of sales. So using this approach now, to get your cost of sales, what will you do? You add closing stock. You add closing stock. You can do it the other way around that you are used to. Some of us are used to certain way that will say opening stock plus purchase, isn't it? Less closing stock. Then you now get your cost of goods sold. Then you now say sales minus cost of goods sold. We give you what? Your gross profits. We give you your gross profits. That is fine if you think, but this is a more professional approach. When you pick your financial statements, this is how it will be presented. That other way was when we started learning trading profit and loss accounts in SS1, that they used to show us the T format. Then we are so used, we love that approach very well. So when we move ahead and they are introducing this vertical format, we see it as something ambiguous. And we try to dislike the format, but as a professional accountant, this is the approach you should embrace.
Okay.
Yes. But you can always check your work. If in case you are using this approach and you are still in doubt of your answer, you can quickly run a check using the one you know. So you add what?
Closing
Your,
stock.
your closing stock. Now, based on the question, what is the policy on stock, on closing stock? Because in the example, you might have forgotten all what you've read. So you need to run back to where you see the issue of stock policy. Now, when you go to the question that the company's stock policy is to reserve what? 30% of the month's purchase as closing what? Inventory. 30% of the month's purchase as closing inventory. Now, students can get confused with this regard because we are preparing financial statements for the year, right? So what will now be the basis of my closing stock? Let me state clearly. Stock is a revolving item. The closing stock in January will be moved to where? February as opening stock. The closing stock in February will be moved to March as what? As opening stock. So it moves like that till what? Till December. Till December. So it is not stagnant, it is revolving. It is revolving. So the last month of the year is what?
December.
December. So, though this question have given us a constant value for these items, but where it is not given as constant, the monthly figures are not constant. You should interpret it in the way I'm interpreting it now. Yes, where the question is not giving you constant value for the monthly issues, monthly activities. So, what will be your closing stock for 2/12 based on that statement? The company stock policy is to reserve 30% of the month.
30% of
30% of 2.6.
it will
Okay.
give us 840,000 multiplied by
Okay.
12.
Okay. Ma, you will not multiply by 12 again.
Okay, sir.
But do you know why you will not multiply by 12 again?
No,
Yes.
sir. No.
Okay, the person that is saying yes. Help us out.
Because we are finding the 30% of that purchases. So we don't need to divide it by 12 again.
Okay. We are determining 30% of the last month's purchase, December.
Yes.
If you look at the statement where you see an apostrophe, 30% of the month's purchases, yes, as closing inventory. So, and that is why I started with the fact that stock is a moving item, is not stagnant. That the closing in December will come as opening in January. The closing in January will come as what? As opening in February. So as at November, the closing in December will come as what? Opening in what? In December. So stock is not, we won't multiply it by 12 because it is a moving item. A moving item. The value will not be constant for each, yes, for each of the months. But for this question, it will not be constant. And the point is this: the months the last month of the year, what will be the purchase? The purchase will be what? The last month of the year, the purchase is what? Will still be what? 2.8.
2.8.
Will be 2.8. Will be 2.8. So 2.8 multiplied by what?
30%.
30%. You have 840. 840. So that is based on months. On months. So I don't know if that is clear, man.
Yes, sir.
So for 213, the
900.
closing stock, and for
You can only like to.
214,
213.
213, 960, 214.
1 million.
So when you add that, your result will be what? For this, 51,240, and for 213, it will be what?
960.
600,000.
Excuse me, sir. I did not get your explanation on this. How you arrived at 840?
8,000.
My network was breaking, so I did not hear you. I didn't understand how you arrived at those figures, sir.
That is 840.
Yes, sir.
From the question, the company's stock policy is to reserve 30% of the month's purchase as
Yes,
what?
sir.
As closing inventory.
Yes.
So he said that stock is a moving item. It is not stagnant. That's the closing in a particular month will be moved as opening in another month. Now that the last month of the year is what? Is December.
Yes,
So
sir.
this stock in November is being moved to what? The closing stock in November is being moved to what? To December.
To
So
December.
if you want to determine your closing stock for the whole year, it will be based on the stock as at the last month of the year, isn't it?
Yes, sir.
So now, since the purchase is constant
Question,
for
sir. Sir, that says, how do you get that says? Because the figure is different.
Is it the one of 50 million?
400,000.
We multiplied it by 12, the monthly sales, which was 4.2 million. We multiplied
Okay.
that one by 12. I got how I knew that one. But it's this closing stock that is giving me my network was breaking when it was explaining.
Okay. It's fine.
all right. All right. Thank you, ma'am. So the company stock policy is to reserve 30% of the month's purchase as closing inventory.
Yes, sir.
As closing inventory. So the stock available as at the last month of the year will be what we will consider. Now, since the purchases, 30% of the purchases for the last month of the year, in which the purchase figure is same, it's same for every month of that particular year. So what will be 30% of 2.8? 2,800,000 for 212. 30% of 2,800,000.
Okay, 840. Okay. It's
So for
840.
213, likewise, what will be 30% of 3,200,000?
960,000.
Then for 214, what will be 30% of 4,800,000?
1,440,000.
Yes. So we have for 213, the addition of 57,600,000 plus 960 will be what?
58,560,000.
All right, 58,560,000. For 214,
87,840,000.
7,840,000. What will be the next thing to do? You less your purchases and opening stock. Less purchases. Your purchases for 212 for the 12-month period will be what? You have the monthly purchases of 2,800,000 multiplied by 12 to give us what?
33,600,000.
33,600,000. For 213 to be what?
38,400,000.
8,400,000. And for 214 to be what?
57,600,000.
7,600,000. For 212, our opening stock. Because we are to less opening stock. What will be our opening stock for 212?
Anybody to tell us?
It
I don't
will be
know.
closing stock.
For
It will be
211.
closing stock of 2011.
Okay, fine. And that will be what?
30%
Of
Of-
what?
2011's purchase.
Okay, fine. So the 30% will be what?
$720,000.
720,000. Somebody is not getting that. Can you raise your hand? Because
Hmm?
the opening stock in 212, January 212, will be the closing stock of what? Of December 211. So when you are commencing the year 212, the closing in 211 will be brought forward to what? To 212. So just locate the purchases in 211 and multiply 2,400,000 by what? By 30%. You get 720,000. Somebody will ask, maybe you joined late. You are not part of the class when we did the analysis. And you're asking yourself that why are we linking stock, closing stock with purchases? You need to read the literatures in the question so that you get the answer very well. Because as part of the company's policy is to reserve 30% of the month's purchases as closing inventory. And that is why we are doing that. So the opening stock in 212 will be what? 720. And for 213,
840,000. 840,000.
840,000. Because this closing stock here in 212 will come as opening in 213. See it. So in 214, what will be the results? The opening stock will be what? The opening stock
960,000.
960,000. See it here. The closing stock in 213 will come as what? As opening in where? in 214.
Yeah.
Accounting is interesting, right?
Atope,
Fine.
Atope.
Yes.
So my network to me, I'll tell you, you're explaining the opening stock of 2012 will be the closing stock for 2011. So what are we going to do when you pick the closing stock for 2011? What are we going to do with it? My network
The
threw me out.
closing
I'm sorry.
the closing stock of 211 will be
Yeah.
opening of 212, and that is where we obtain 720,000 naira, which is
So how
serving
did
as
you
what?
obtain this?
Go to the
Huh?
question. From the
Yeah.
company's policy of 30% of the month purchase serve as closing stock, what do you have as the monthly purchase in 211? Can you confirm what you have from the question?
2.4
Multiply that by 30%.
or 720.
720, right?
Yes, sir.
So as at the end of January 2011, based on this company's policy, 720 will be their closing inventory, which will be brought forward as what? As opening
Opening.
inventory in 213, in 212.
Okay.
So that
Um,
is the result there. Yeah, in this class, as at this point, you don't know what we are doing. Raise up your hand. Okay, that is fine. Okay, I have two. Okay, because it's not good you just burn your data and you don't know what we are doing. At least before we go far, we can still induct you into what we are doing. Or is it that you join late? Madam Blessing.
Yes, sir. I just came back from work.
Madam Juliet, let me hear from you.
Yes, sir.
You too, you join late, man.
I just, yes, sir.
But I'm actually catching up. My problem is I don't know where the questions start. I tried to
Where the
get where the
question?
questions. Yes, I know we are solving the question you sent on the group chat. So I'm
Okay.
just trying to get where the question starts.
We are just starting, man. This, what you are seeing on the screen is where we profitability statement according to the requirements of the question.
So sorry, the question you sent on the group chat. The from where you are picking this value, the page starts from the company policy on sales is to ensure. Is it from there that the question starts?
Let me check.
No, don't do Nigeria Limited. That is where it starts.
Madam Blessing, you're on Business platform, right?
Yes, sir.
You're on Business platform, right? Okay,
Yes,
let
sir.
me go to Business platform and see. Okay. See, I will
I've
put a
seen it, sir.
message there.
I've seen
Okay,
it.
fine. Okay, I'll just use a full stop to highlight that. All right. Madam Juliet,
Sir,
you don't worry, you catch up. Like if I go back, we'll not move as expected. But just keep following what we're doing.
okay, sir. Thank you.
Then I will forward the video to the platform. Then you can just yes.
Okay, sir. Thank you.
All right. So the opening stock, haven't determined these values. For you to get your gross profit, what will you do?
Less.
Your net sales less what? Your cost of what?
Who should?
Cost of
Cost of
sales.
sales.
Yes, your cost of sales. So for you to get your gross profit, the result will be what? For 212.
26,920,000.
26,920,000. Can I get a confirmation to that?
Come again, sir.
No, for us to get our gross profit, what are we going to do? 51,240 less 33,600.
16,920,000.
Okay.
16,920,000.
Wow.
For 213, it will be what?
19,320,000.
This one is checked already.
And for 214,
120.
29,280,000.
7.
for you to get your net profit, what will you do?
Less expense.
Less expenses and depreciation.
Less our expenses and depreciation. Our expenses. So from the question, what are the expenses?
Salaries.
Cash expenses, salaries, rent.
Rent.
Salaries. Okay. Salaries. For 212, the salary figure will be what?
430,000.
For 212, let's go back to the question. Please refer to the one on the WhatsApp group because you might not see this for some of us. So let me check. Monthly salaries. 212. 430. There is no any additional information on the issue of salary. So the whole salary for the year 213 will be what? You have in the question that of each month, which is constant for the whole 12 months.
5,160,000.
Fine. That is this monthly figure multiplied by 12. You have what? The salary for the year 212 will be what? 5,160,000.
How do we get it, sir?
This is it. Monthly salaries.
Mhm.
Do you see monthly salaries?
Yes, sir.
When you want to convert monthly figure to annual figure, what will you do?
Multiply
Multiply
By what?
12.
by 12.
So this monthly value of 430 multiplied by 12 will give you the whole salary figure for the year 212.
5.160.
So is that clear, Ma?
Yes, sir.
Right. So for the year 213, the figure will be what?
Same.
The figure will be same because it's same.
Yes. Per month.
For the year 214, it will be what?
57,600.
5,760,000.
5,760,000.
Any other expense?
Rent.
Cash expenses. Rent and cash.
We have rent. Rent. For 212, the monthly figure for rent
1,200,000.
that is 100,000 per month multiplied by 12. 1,200,000 for 212. For 213,
Same thing.
for 214, same.
You said no.
Madam Blessing, any question?
Yes, sir. I'm sorry to take us back, please. Sir, please, how did you get this opening store and closing store?
From the question, there is a paragraph after Roman figure 1 and 2. You see the policy on purchase is in agreement with the supplier's policy, which is to pay for all supplies in the months following. Full stop. The company's stock policy is to reserve 30% of the month's purchase as closing inventory. Now, it is from closing inventory you get what? Opening inventory. The closing inventory as at 31st December 2011 will be moved forward to 1st January 2012 as what? As opening stock. Now, for the closing, that's 30% of the what?
Purchase.
Of the month purchases. So 30% of those purchases you see in the question. For 212, we give you what? 840. For 213, we give you 960. For 214, we give you what? 1,440. Let me get that. You get that, please.
Yes, sir. Thank you.
So now, any other expense?
Cash expense.
Cash expenses.
Hello?
Cash expense. If you have a question, just raise up your hand so that I will just call you. I will know that you have a question. There is an emoji for signal on the Google Meet platform. You can just locate it. Once I hear the sound, even though I'm not seeing you now, I will know that somebody is about to ask a question. Then I'll go to the main screen and identify you. So we have rent. The next, we have cash expense. Cash expense. For 212, the cash expense will be what? Monthly cash expense now. To make it annual cash expense. For 212, it will be what? 240,000 multiplied by 12. And that will be what?
288. 2,880,000.
880,000.
Then for 213,
3,360,000.
3,360,000. And for 214 to be what?
9,320,000.
4,000,000.
9 million.
Well, it's not correct.
Oh yeah, give the correct answer.
It's correct.
What?
4,320,000.
Yes, now.
All right, Madam Juliet, can I get your question, ma'am?
Please, from the question, I was thinking that the monthly cash expenses is 220,000 under the 2011. So I don't
Yes,
know
ma'am.
where you are getting 2.8.
Yes, ma'am. Yes, ma'am.
212. I say, oh,
Under that's 212. 240
Okay.
it's
multiplied
212
by
to 13 to 14.
Okay. Thank you.
So that figure of 212, ma, you are seeing in the question is monthly. So for you to convert it to annual, you multiply that by 12. 240 multiplied by 12. Then you have 2,880,000. Then for 213, you have what? 280 multiplied by 12. You have 3,360,000. And for 214, you have what? 360 multiplied by 12. You have 4,320,000. Any other expense?
Depreciation, sir.
Depreciation on motor vehicle.
Depreciation. So how are we going to treat depreciation?
20% of
motor vehicle. That's 20% of 5 million.
Will give us what, ma?
Will give us 1 million.
Give us 1 million.
Times 6 over 12 for 2013.
All right. For the sake of those, for the sake of those just joining us, then I want to ask some questions about that. You go to the additional information. The additional information say that the company purchased a motor vehicle in July 2012. So we said July to December is how many months? 6 months.
Yes.
Which was paid for in September 2013. The cost of the motor vehicle was what? 5 million. And annual depreciation for the motor vehicle is what? 20%. So 20% of 5 million we give you what? 1 million. But since the machine was purchased 6 months to the end of what? Of 2013. How many months are we going to prorate or to allocate the depreciation for 212? It will just be what? 6 months.
6 months.
6 months. So when you get the annual value of 1 million, you say 1 million divided by 2. So the value of depreciation for 213 will be what?
500,000.
Will be 500,000. I'm not sure. I don't want to show the workings because this is straightforward something. So in 214, what will be the value of depreciation?
1 million naira.
1 million. In case you want to ask, why are we not having value of depreciation in 212? We don't have any asset as at this period. The question then states that we have any asset as at this period. The only assets we have as at 213 commenced from where? Was obtained as at 1st of July 213, and that is why we are having this in this order. Half of the year's value of depreciation, while in 214 we have a full charge of depreciation. So take note of that. Take note of that. Anything else?
No, sir.
So we can get our net profit now. We can get our net profit. Gross profit less the expenses. We have what? So the gross profits less the expenses. We have what? Net profits for 212 will be what?
60,920,000.
The net profits For 212. The figure is what?
60,920,000.
No, that is the gross profit. We want to
7
get
million.
the net
7,680,000.
Ah.
now for 213.
Nine million 100,000.
Okay. 9,100,000. And for 214.
Mm. 70 million.
20 million. Madam Victoria, what is your question, ma?
Yes, sir. Sorry, sir. Still on depreciation.
All right, ma.
The question didn't talk about 2014. Why do we have to? Where is the 1 million coming from? Because when we prorate in 2013 to be 500,000. They didn't mention anything in 2014. But we put the.
All right, ma. Yes, your question is I have to mute you so that I will not get reverberation of the speech. Yes. Because so now this is it, ma. An asset is not a one-off item. An asset it have a useful life. Yes. And for assets like motor vehicle, the useful life mostly, all things being equal, should be like 5 years. So this is an asset. So if you acquire a motor vehicle today and you set up a depreciation policy, and if you look at the statement, annual. So as at today, you purchase an asset. As you use the assets begin to reduce in value. For you to be able to purchase another one, you need to set up a depreciation policy. Now, depreciation for this motor vehicle will not just end in 2013 because you just commence the usage. So depending on the company's policy of if they are to use the assets for 5 years, and as at the end of 5 years, they'll give it out as scrap value, depending on them. They didn't give us information about that. But the point is there's a straight line depreciation, annual depreciation. So they didn't give us information about 214. That is very clear. But the examiner is expecting us to know that an asset will not just be used for 213 and will close the chapter of the motor vehicle. So it is expected that it will keep on being put into use for a period of time. A period of time. So, and that is why we have a full charge of 1 million for 214, because it's expected that when you use the motor vehicle fully for the year 214, you should charge 20% of what? Of the cost of purchase, which is 5 million. So from our knowledge of depreciation, of valuation of assets, assets have a useful life. So based on the useful life, we have to compute depreciation for 214. And if the question still want us to go further, to even solve for 215, depreciation for 215 will still be 1 million. You want us to solve to 216, to give, we'll still compute depreciation to be 1 million based on straight line method until when it becomes scrap, and the scrap value will be determined if the question wants us to do so. So the reason why we're having 1 million is because the asset is not just a one-off item. It will continually be put into use. All right, ma'am. Yes, I can see your message on the chat box, ma'am. Yes. So this is the profitability statement. This is the profitability statement. Before we move to the next thing, which is prepare a cash flow statement for 212, 213, 214. Any question on this? You should be able to solve this question confidently after the class. That is the objective of this class. Even though the first time you will solve, you will experience some you didn't understand what we've talked about in class. When you experience those hitches, you go back to your notes. Then the next time you overcome those hitches, that is the learning process. Yes. So now, any question about profitability statement? Any question? So we'll move to the issue of cash flow. What is cash flow? Even though we've talked about it while we featured the last example, but at this point, there is a serious concern about cash flow. So what is cash flow? What is cash flow statement? Cash flow statement or statement of cash flow. Any idea?
Can I try?
Yes, you can try, man.
It's a movement of cash in and out.
All right. Movement of cash in and out. Yes. So in cash flow, let's delve a little. In cash flow statement, in statement of cash flow, there are three main forms of activities. What are they? I'm deviating a little anyway.
Operating,
Operating,
investing, and
financing activities.
Yes. Okay. I can see your message also from the chat box. Yes. So it shows the movement of cash from operating, investing, and financing. Yes. So a statement of cash flow is a financial statement that shows how cash and cash equivalents move in and out of a business during an accounting period. So that is cash flow for you. So looking at this question, because of we are to prepare cash flow statement for 212, 213, and 214. So all we'll be looking at are issues of cash, the cash elements for each of the years. So now, Let's go there. Let's go on. Please, you have to follow very well so that I won't have to repeat myself as much. Let's go, because at this point now, you need to do some, you need to follow very well. Follow well, very well, you get it. There is no, so the heading again, we going to do Nigeria Limited. Nigeria Limited. Cash flow statements. Cash flow statements for 212, 213, and what? And 214. Any question? Okay, I heard a sound. I see somebody raised. Okay. So, cash flow statements. So we have 212, we have 213, we have 214. Now, in this cash flow, we have two sets. We have cash inflow, and also we have cash outflow. The difference between your cash inflow and your cash outflow will give you what? Your net cash flow. So we need to determine our cash inflow. Now, from the question, what are the elements of cash inflow? From the question.
Sales.
One. Fine. One, sales. Very good. Going back to the question, that cash sales is what? 40% of the monthly sales. Now, I will not want to go in a complex way. I will just make it very simple and direct. Very simple and direct. Since you know that your annual sales, both cash and credit, is what? Is 50,400,000. 40% of this will be what?
Is the cash sales.
40% will be the cash sales, and the 60% will be what?
Credit sales.
Will be the credit sales. So the 40% of these sales, 50,400, will be what?
20,160,000.
Okay, 20,160,000. Fine. While the other parts, the 60% will be what? Will be what value?
30,240,000.
Let's say 320. Fine. I just need to show the workings. Now, let's just show a workings, receivables, to make our work easy. Let's just show a working. If not, we'll keep going back and forth. Let's show a working to break down everything. Now, because I will need the receivable due. The receivable due in 211. In 211. The credit sales in 211 will be due in which year? Will be due, part of it will be due in which year? In 212. So we need to show that workings. We need to show the workings. So very quickly, 211, 212, 213, 214. So let's split our sales. The sales for 211 overall will be what? 3,600,000 multiplied by 12. This will give you what? This should give us 43.
200 million.
Now,
43
for
million 200.
for 212, our overall sales will be what? 4,200,000 multiplied by what? 12. This will give us what? 5,400. We've solved for it before. For 213, monthly sales, 4,800,000 multiplied by what? By 12. This will give us what?
57,600.
600. For 214, the monthly sales is what? 7,200,000. The annual value will be what?
86,400.
86,400,000. Now, out of these sales, the credit sales is what? Or cash sales, rather. Cash sales is what? 40%. And the credit sales will be what?
60%.
You know, the question only states that 40% is cash sales. You are supposed to know yourself that the balance will be what? Credit sales. In case you are going to the question to look for where the states credit, you will not see it. They only put cash sales is what? 40%. It means the balance will be what? Credit sales. So for 211, the cash sales value from 43,200,000 will be what? 40% of 43,200,000 will give you what? To give you
17,280.
17,280. The balance will now be what? 60% of 43,200 will give you what? 25,920. Take note of that. Now for 212. For 212.
Hello, sir.
Yes, ma'am.
Network mi ò dá mo ṣe wọlé padà ní mi ń gẹ́ẹ̀tì bẹ́ẹ̀ ṣe gẹ́tẹ̀ o. Mo ṣe wọlé join padà ní.
All right, ma. At what point, ma?
This receivable. What brings that receivable, sir?
Yes. What brings receivable is that the whole of your sales in a month will not be due for collection in that month. So the sales value with your debtors will be termed as what? Receivables. Receivables. So the credit sales given to your customer that will be due at a later date will be termed as what? Receivables. Will be termed as what? Receivable. I don't know if you get that, man. So based on our annual sales, we want to split the sales into cash and credit sales. And that is what we are doing presently. If you look at the first row, this is your annual sales. Out of these annual sales, what fragment is cash sales? What fragment is what? Credit sales. And that is where we are. I don't know if you get that, man. Do you get that, man? Are you there, man? Okay. So for 212, the cash sales will be what? 40% of what? 5,400,000 to be what? To be
160.
And for the credit sales will be what?
30,240.
240.
And for 213, it will be what?
23,40,000. 23,040,000.
And for the credit sales will be what? For 60% of 57,600.
51,840.
Should be 34, right?
34,050,000.
Sorry, we are talking in millions. All right. For 214, 40% of 86,400 will be what? The cash sales. That should be what?
34,560,000.
4,560,000. And the credit sales will be what?
$51,840,000.
Fine. Very good. Please, everybody pay attention. Don't allow your network to pull you out now. Going to the question that the balance of the month sales is to be collected in the month following what? Sales. It means this credit sales here, please follow. You know, this is your overall annual credit sales. This is your total credit sales for the year. Take note. If this is your total credit sales for the year, what is your monthly credit sales? What will be your monthly credit sales?
This amount divided by 12.
Fine. Take note of that. I don't want to write that. I don't want the table to be too cumbersome. So your,
Sorry, sir, please can you come again?
if this is your annual credit sales, what will be your monthly credit sales? It will be 25
Okay, divide by 12.
Divide by
divided by
12.
12. Fine. Why am I asking this question, or why am I saying this? If you go to Roman figure 2 in the question, the balance of the month sales, it means I need to break down these annual credit sales into monthly credit sales, which signifies that the balance of the credit sales in the month of January will be due for collection in which month?
February.
Take note of that.
Come again,
The
sir.
in January, the credit sales in January will be due for collection in which month?
In February.
In February. Take note of that. So in February, that credit sales that is collected will now be cash element, isn't it?
Yes.
Will
Yes.
be a cash inflow.
Yes,
Will be a
sir.
cash inflow. Take note of that.
Yes.
In February.
February credit sales will be due for collection in which month?
March.
March.
As at March, it will now become what? An
Cash.
inflow.
Cash inflow.
Take note, it will move in that order. November credit sales will be due for collection in which month?
December.
December.
Take note of that. Now, December credit sales for 211 will be due for collection in which month and year?
January 20.
January
12.
20.
Very good.
12.
Very good. This understanding must rest with you.
Amen.
Now, it means that at the end of each year, we will have 1 month outstanding, 1 month credit sales outstanding, isn't it?
Yes, sir.
It means as at the end of 211, December credit sales will be outstanding and will be due for collection in which month? In the month of January 2012. Isn't it?
Yes, sir.
Fine. Let's just write something about that. So outstanding receivable. Outstanding receivable. Outstanding receivable. For 211, it will be what? It will be what?
2,160,000.
Fine, 2,160,000. How did we get that? 25,000,000
Divide by 2.
Yes, divide by 12. Since it's the same value of sales, of credit sales for each month, it means that of December will be outstanding as at the end of what? Of 2/11. Take notes. Now for 2/12, it will be what? 3240 divided by what? 12.
12.
So the art of December will be outstanding as at the end of what? Of December 2012. And that figure will be what?
2,520,000.
520,000. And for 2/12, 2/13, it will be what? 34,560 divided by what? 12. And that will be what? And for
2,880,000.
yes, 2,880,000. And for 2/14, it will be 51,840 divided by 12. That will be what?
4,320,000.
1,320,000. 1,320,000. So the point is this: as at the end of 2/11, how much did you receive from your debtors? How much did you receive from your debtors as at the end of 2/11? Who can give me the answer? As at the end of 2/11, how much?
What is supposed to receive should be
2
210.
million. Should be. Supposed
There
to
is
be
no 210 December.
There is no 2/11 December.
210, because it's supposed to receive 210 December in January 2/11.
Yes, yes. So that is not included because it is assumed it has been incorporated, but we want to know. Yes, there is no 210 December, fine. Yes, so we are not working based on that. We want to pick the value from 2/11 to 2/12. But as at that, these figures now, as at 2/11, what do you have? What will you have?
2,160,000.
41,040,000.
Okay. Okay.
I don't get it though.
And we are still coming. Me too. I'm still digesting it.
Excuse me, sir. What's your question again? Come again, sir.
Okay, because of time, this is it. Our total credit sales for 2/11 is what? 25,920, right?
Yes.
We are not paying for 1 month because out of 1 month, December will be due in the next year, isn't it?
Yes.
So now, how much are we getting from our debtors? It will be 25,920 minus this 1 month value, isn't it?
Yes. 2 million.
25,920 minus this 1 month value. So we have it as what? Cash flow. Cash flow from debtors. Cash flow from debtors. We now have it as 23 what? 760. And for 2/12, it will be 3240 minus 2,520 to be what? 27. And for 213, it will be what? For 213, it will be what?
This one.
Should be 31,680. That is 34,560 minus 2,880,000. And for 214,
4
it will be
million.
what?
4,752,000.
Okay.
47,520,000.
520,000. All right. Where we are driving at our receivables. So now, as at 2/12, your receivables will be what? Let me see. Add receivables. This receivable outstanding as at 211 here will be due in what? In 212, right?
Yes, sir.
So we have it as 2,160,000. The receivable due in 212 or the receivable outstanding as at 212 will be due in which year and month?
213 January.
213. So you have it as 2,520,000. The receivable due or outstanding as at 213 will be due in which year and month?
January 214.
Which will be 2,880,000. So in terms of receivables for the years, receivables now, let me make it clear. In terms of receivables, what will be your total receivable for 212? For 212, your total receivable will be what? Your total receivable will be what for 212?
Can we add both together?
Very well. That is what I'm saying. Total 27,720 plus 2,160,000. You have it as what?
29,880,000.
And for 213, it will be what?
Plus. That's fine.
Hope you are punching your calculators.
Yes.
So I'm not getting it. The last edition, the total you are talking about, I'm not getting it.
31,680,000. 31,680,000 plus 2,520,000. What will you get, ma?
2014. That's 50,400,000. 50
I did
million.
not get the first one. So that's why I'm
50,400,000.
All right. So, ma, the first one for 212. When you press on your calculator, 27,720,000 plus 2,160,000. What will you get, ma?
okay, 27 million. So I've gotten it.
29.
And excuse me, for
29,880,000.
2014 is 50,320,000.
A punch. It's not correct.
So let's confirm that, please. Can anybody confirm this, please?
It's 5,400.
5,400.
It's correct. It's correct.
5,400.
It's 5,400.
5,400.
400. No correct answer.
All right, fine. So please help check computes again. So now your sales, your cash sales. All right, Madam Esther.
Sir, please, can you go back?
Yes, very fast.
So, yes, under our receivable, why is 2011 new? Like, my network threw me out when you were saying that part. My village.
Yes, 2011 is new because the question wants us to solve in particular for 212, 213, and 214. So the outstanding receivable in 211, which is 2,160,000, was brought forward to what?
To 2012.
To 2012 as 216. So we are not concerned about 211. If not, would have
Take 2010.
2010.
From 2010. Okay.
2010. But we are majorly concerned about what? 212, 213, and 214.
All right.
So that is why we need to incorporate 211 to know what will be the outstanding receivable to move it forward towards 212. Mr. Babajide?
Yes, sir. Thank you.
Okay, sir. Thank you, sir. So my own my question of is the concern is that now when you have the total receivable, so I think I'm confused around that place. Not about the figures, but about the description. So I think that now I think that it should be income, total income, because it is certain that the cash flow will be received, and then the credit sales from the previous month will also be received in that year. So that's my confusion, sir.
Okay, it shouldn't be a confusion, sir, because this receivable now is a working in which we are going back to our cash flow statement to record it as receivable, a definition to show that these are outstanding, these are money received from our debtors. So going to our cash flow, and that is why it is being recognized in our cash flow as an income, So that is why we are not tagging it as total income, but with a definite definition of where the source is coming from, which is from our debtors. And that is why it is tagged as what? Receivable. So going back to our cash flow, we'll record it as receivable, which shows that as at the end of 212, it's a cash element. So the value of sales, cash sales for the year 212 is what? Based on our cash sales for the year 212, see it here, 2160.
Okay.
That is the cash sales, 2160. Now, your receivable due or received within that year is what? Receivable. Receivables. We just saw for it. This is it. 29 what? 880. Isn't it?
Yes.
It's an inflow as at the end of that year. So 29 what? 880.
Hello, sir.
Yes, ma'am.
Mr. Why is 2,160,000 receivable? Abi sales, cash sales for 2012. Why?
In the question, ma'am, 40% of your total sales for that year is what? Check the question. The cash sales is 40% of the monthly sales. So
Yes.
your monthly sales multiplied by 12 will give you what? Your
50
annual
million.
sales. Your annual sales. So 40% of your annual sales will give you what?
20,160,000.
I don't know if
I've
you
seen
get
it.
that, ma'am.
I've seen it.
All right. So now, based on this, for 212, your sales will be what? Your cash sales will be what? Your cash sales will be what?
23,040,000 naira.
40,000.
23,040,000.
And your receivables will be what?
34,200,000.
34,200,000. And for 214, your cash sales will be what?
34,560,000.
34,560,000.
560,000. And your receivable is what?
50,400,000.
400,000.
50,400,000. 50 million. So based on this, I'm very sure we don't have any other inflow. Your total cash inflow will be what?
Addition.
For 212, it will be what?
$99.
50,000,040,000.
40,000. 50,040,000.
And for 213,
57,240,000.
and for 214, maybe 84.
84,916,000.
57,000 plus 50,000,000. 84,960,000.
So we move to our cash outflow. Cash outflow. What will constitute our cash outflow?
Purchases.
Purchases.
Okay, fine. Purchases. So let's show similar workings as we've shown for. Now let me ask, when you make purchase and you are yet to pay, what will you term that? Assume you want to record that in your statement of financial position.
Payable.
Payable. Fine. Okay, Mr. Babajide, I can see your hand up. Okay, sir.
No, sir. Is the former one.
So it will be termed as what? Payable. So we want to know, to see the analysis of our payables. Yes, because we made purchase, but we didn't pay as at when due, we didn't pay in cash. So we want to see. Let's go to the question that the policy on purchase is in agreement with the supplier's policy, which is to pay for all supplies in the month following. In the month following. This is similar to what we've done in terms of receivables, right? It means that when we make purchase in December, definitely we have to pay in January, isn't it? Because of the statement, the policy on purchases is in agreement with the supplier's policy, which is to pay for all supplies in the month following. In the month following. So in terms of payables, what are we going to do? Follow similar approach. So 211, 212, 213, 214. So now purchases. Annual purchase will be what?
2,400,000 pounds.
Purchases. That is 2,400,000 multiplied by 12, and that will give us what?
28,800,000.
Yes, that is for 211, and for 212 to be what?
So you can help us to write it as we write the one under receivable. That amount multiplied by 12.
Okay. I think
So that's why we want to watch it again. You know how we got the answer.
okay. I was thinking you should have
It's my fault. 2,400,000 multiplied by 12.
Mr. Yunus, are you in this class?
Yes, I'm the one that is talking now.
No, not you, ma'am. Mr. Yunus.
Okay.
So for 212, the monthly purchase is what?
2,800,000.
Monthly purchase. Okay,
800,000.
2,800,000.
33,600,000 times 12. 33,600,000.
And for 213?
3,200,000.
Times 12.
38,400,000.
And for 214?
4,800,000. 57,600,000 naira.
So now, your monthly. All right,
So I checked purchases to 2011 is
Yes, it's not
It's
correct.
28800.
Okay. 28,800. All right. So now, if this is our annual purchase for each of the months, definitely 1 month purchase will be outstanding as at the end of each year, isn't it?
Yes.
1 month purchase will be outstanding as at the end of each year. So now, for you to now get the total amount payable for each of the year, it means you need to less the outstanding purchase for each year. Now, as at 211, the outstanding value of purchase will be what?
2,400,000.
That is 2,400,000. So 28,800,000 less 2,400,000 will give you what?
26,400,000.
So what will you term this 26,400,000 as? That is payment to suppliers now?
Yes.
Payables. This is the actual amount you paid. Though you purchased goods worth 28,800, but what you paid in cash within that year is 26,400. 2,400,000 is still what? Outstanding as at the end of that year. So now, and this value of 2.4 will be due for collection in which month and which year? In
January 2012.
2012.
Fine. So let's treat 212. So for 212, your outstanding value will be what? 2,800,000.
800,000.
When you less, how much will you pay for that year?
30,800,000. It's negative.
30,800,000.
What do you less from that?
It's negative.
33,600,000 less 2,800,000 should be 30,800,000. So the outstanding due brought forward
Mr.
from
Tope, that is
211.
negative.
Please, what is negative, ma?
The 30,800,000 in under 2012.
Okay, how is it negative, ma?
33,600,000 is greater than 2,800,000.
Yeah. Minus 30,
So is it negative, ma?
It's positive.
So the outstanding due brought forward from 211 to 212 will be what? The 2,400,000 for December purchase that will be paid in January 2012 will be what? 2,400,000. This value here, the outstanding, to be settled in January 2. So your total or your payables will be what for 212? Total payables will be what?
33 million.
33 million
So
200,000.
200,000.
Then for 213, we're going to have what?
35,200,000.
Wow. So we'll less the 1 month outstanding as at December. That is 3,200,000. You're going to have the actual payment as 200,000. So do we have any brought forward outstanding from 213 to from 212 to 213?
Yes.
That is 2,800,000. So the total payables in 212, 213 will be what?
38 million.
Now, as at 38 million, as at 214, the outstanding will be what?
4,800,000.
4,800,000.
4,800,000.
52 million.
The payments
52,800,000 naira.
52,800,000 naira.
Outstanding now.
800,000. So the outstanding brought forward due
3,200,000.
3,200,000. So the total payables will be what?
56 million.
50 million naira.
56 million. We're going back to our cash flow. Going back to the cash flow, our payables in terms of cash will be what? Payables for 212, it will be what? What you have here, 33,200,000. 33,200,000. For 213, it will be what?
38 million.
It will be
38 million.
38 million. 38 million. And for 214,
56 million. 56 million.
56 million. 56 million. Any other expense that is in form of outflow? We have what? Salaries, our monthly salaries. They are cash items paid as at when due. we have salaries. As at 212, the total salaries as computed earlier is what for the year? That is 430 multiplied by 12.
5,160,000. 5,160,000.
5,160,000. And for 213, it
The
is
same
what?
amount. The same amount. 5,160,000.
5,160,000. And for 214,
5,760,000. 5,760,000.
any other expense in form of cash paid as
Rent.
at due?
What? Rent.
Rent. The rent. The value of rent for 212.
1,200,000.
We have 1,200,000 for this. Likewise, 1,200,000 for this. 1,200,000.
Cash expenses.
We have cash expenses. Cash expenses.
$2,880,000.
Hope every other person know how we are getting this value. We've used them before.
240,000 multiplied by 12.
Yes, we've used them before while we're solving our profitability statements. So 2,880,000, and we have this.
3,360,000.
And for 214 to be what? 4,000,000.
4,320,000.
320,000. Any other expense?
Depreciation. Can we write down?
It's not a cash item,
Yes.
but there is something else.
Oh.
Cash balances.
Not yet. The money you use to buy the motor vehicle.
Okay. 5 million.
Is an outflow. For which year? For 213.
13. 5 million.
5 million. So your total cash outflow will now be what? The total cash outflow will now be what? For each of the years. Total cash outflow. Will be what? For 212. That is all these.
$42,440,000.
42,440,000. And for 213.
$52,720,000.
And for 214.
67,280,000.
Yes. So the difference between your cash inflow and cash outflow will now give you what?
Net cash flow.
Net
cash flow.
Net cash flow. So you can have your net cash flow to be, you can term this as A
And B.
and term this as B. So your net cash flow will now be what? A minus what? A minus B. So you have it as what? 50,040,000 less 42,440,000. You're going to have what as your net cash flow for 213. And for
4,520,000.
and for 214. So what next now?
Opening cash balance.
So do we have any cash balance brought forward? Do we have any cash balance brought forward?
Yes, we have.
Every agent, every cost
20,
of
20
affliction and sorrow and
4
pain
million.
as
4 million naira.
4 million naira. So that's what is the date on that?
December, that is what December,
First
2011.
declare that the smiting of every
The opening
So
for
we have opening cash balance will be what? That value which is as at what?
as at December.
31st December 2011 will come as opening in January 2012. So, and the value is what?
4 million.
4 million.
4 million. So, what will now be your closing balance as at 212?
11,600.
Like 7.6 plus what? 4 million. So your closing cash balance will be what? 7.6 plus 4 million. You have it as what?
11,600,000.
11,600,000. Now, this closing balance as at 212 will be what?
4 million.
Will be opening in which year?
2013.
Will be opening in 2013. So you have it as opening in 2013 to be 11,600. The closing will now be what? 4,520,000 plus 11,600.
Okay. Okay.
So the closing in 213 will be opening in which year?
2014.
We have it as 16.
120,000.
Then the closing in 214 will now be what?
Read the opening for 250. If there is
19 million.
3 million. 33,800,000.
What am I getting?
That's 17,680,000 plus 16,120,000.
Okay. 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 That's 3,800,000.
Yes, 33,800,000. So this is how your cash flow will come. This is how the cash flow will come. This is what the question wants you to do.
Thank you, sir.
Any question, please? Before I give my own question.
Yeah.
The payable and the receivable, they were confusing, but I will listen to the video again because, in fact, it is well.
My sister, it is well. You're getting there.
Yes, ma'am.
Madam Juliet, it is well.
God will help us.
Sir. Sir, please, what about the C part and the D part of the question?
All those ones, they are just child's play. What is the C part saying? That one is, those ones, they are determine and comment on the liquidity ratio. So what is the formula for liquidity ratio, specifically current ratio? What is the formula?
Current asset over current liability.
Fine. Current asset over current liability. So from what you've solved now, what are the elements of current assets?
Closing inventory,
Closing
receivables, and cash.
Receivable and cash.
And closing inventory.
Yes.
Specifically, they
And closing
mentioned,
inventory.
yes, they mentioned 214, right? 214. So you
Yes,
go
sir.
to your 214. What is your value of closing inventory?
840.
Your value of closing inventory in 214.
So
It's 960,000. No, sorry. 1,040,000. 1,440,000.
Okay, how did you get that?
We have already worked it earlier. It's
Okay, fine. We've worked it earlier for 214. For 214.
Okay.
So 1,440,000.
That is your value of closing inventory. Your receivables as at 214 is what? Your receivables as at 214. The outstanding. You see,
1,320,000.
your cash balance as at 214 is what?
50 million.
400,000.
See it here.
Where is it? Okay. 33 million.
So when you add all those things, they are your what? Components of your current assets. Your current liability will be what? What are your payables? So your value of payables outstanding as at the end of 214 is what?
4,800,000.
4,800,000. So current ratio, current asset divided by current liability. When you add all those values together, you should have 39,560 divided by 4.8. You have your current ratio.
Please, still your working, sir.
Is what? 2:1. If a company does not have current assets to offset its current liability, twice of its current asset to offset its current liability at the immediate, it means the organization is having an issue. In this case, what is your value of current asset to current liability? Can you solve that? Let's get the figure. When you add your total current assets.
Show your workings first.
No, solve it,
Okay.
write it. I'm giving you the figures.
We are not writing it down.
8.2
1,440,000
plus 4,320,000 plus 33,800,000. When you add everything, you should get what as current asset value. No, it's not every time I will write. Some people are not writing, they are just watching, and in my class, you have to be writing.
So please do a recap of that current assets. 1,440,000.
This is it. This is it.
1,440.
This is it. Your closing inventory as at what? 214 is this. This is your receivable as at 214. Outstanding is what? See it here.
4 million.
See it's your cash balance as at the end of 214. Your cash flow statement is what? See it here. 33,800,000. When you add these three variables, you have your total current asset as at 214. Because that is what the question wants you to do. I don't know if that is clear. Is that clear, please? Then your current liability for 214, we only have payables. So when you add those three values, you should have 39,560 divided by 4,800,000. You should have what? On my calculator, 8.24 ratio 1. 8.24 ratio 1. It means that the company is doing well. They surpass the standard of 2 ratio 1. That they have sufficient current assets.
Current liability.
They have sufficient current assets to offset their current liability. So by implication, if I'm to interpret this again, it means they are tying too much cash, too much current assets. They are not using it as appropriate. If we want to go into working capital analysis, we'll do that in financial management. Yes, it means they have too much money being tied down. So they are to make use of it. Yes. So that is that for current ratio.
Please help us to write it there so that when others are watching it, they will know how we got the answer.
No, the others, they will hear what I've said.
Yeah, please, sir. They are begging.
I will write it.
Thank you, sir. You are the best.
No, I'm not the best. I'm still coming up. Current asset divided by what? Current liability. Current liability. So the components of current
assets
are of current assets as at 240, we have what? We have the closing inventory. Closing inventory, which is what?
440,000.
We have receivables, which is what?
4,220,000. 320.
And we have what? Cash balance.
33,800,000.
3,800,000. So your total will be what?
39,560,000.
39,560. So your
Current liability.
current liability, I'll just write it here. It's just a single line item. Current liability. The value is what? Payables. Payables. With the value of what? Payables. 4,800,000. So when you do that, when you substitute into the formula here, we're going to have what?
39,460,000 divided by 4,800,000.
39,560 divided by what?
1,000. 4,800,000.
So the result will be what?
8.24.
0.24/1.
How do you get that one?
The standard of current ratio
Okay.
is supposed to be your current asset should be twice of your current liability. So the standard is 2:1. Do you get that now?
Yes, sir.
So if an organization is not having a current asset that can offset its liability up to twice of the current liability, it means they are not faring well. They are not financially healthy. So they should work on that. So, but in this case, we have a case of 8.24. It means that this organization is having too much current assets that can pay its current liability about 8 times. So it means that they are holding too much cash, too much assets, too much stocks, too much cash balance. You can even see it, too much cash balance, which they can turn over to make more profits rather than keeping this money. You understand? So the standard from your financial reporting, you will do more of this. Yes, you do more of this. So the next thing in the question is what?
Gearing ratio.
Gearing ratio. What is gearing? What is gearing? I know everybody is tired. Gearing. Gearing ratio. Gearing ratio is a financial ratio that measures the extent to which a company is financed by debt compared to what? Equity. So, how much of debt do you have in your overall capital. How much of equity do you have? So the proportion. So gearing ratio in this regard now will be your total capital. The total capital of this organization is what? Or was it going to is what? From the first paragraph of the question.
15 million.
15 million. So out of 15 million, how much is debt?
70%.
70%. 70%.
It's 30%.
Oh, 30%.
So what is 30% of 15 million?
Please, where do you see that 15 million? Oh,
First
4.5 million.
4.5 million. The first paragraph, go to the beginning of the question. You read through, you see it. So gearing ratio is your debt capital divided by what? Your total capital. Debt capital divided by what? Your total capital. That is gearing ratio. And if we are asked to determine issues of debt to capital employed ratio, it will be long-term debt divided by capital employed. But for this case, gearing ratio is simply your debt capital divided by your total capital. So your debt capital in this question is what? What is the
4.5.
element? 4.5 divided by your total capital. What will you have?
0.3.
0.3, right?
0.3. Yes.
Yes. So
0.3.
in
come
terms of
again.
100, when you multiply by 100, it will be what? 30%.
Yes, sir.
So your gearing ratio is debt capital divided by what?
Total capital.
Total capital.
Total capital.
Transform.
So when you do that, you're going to have
Debt capital should be 70% of that 15 million.
yes, is debt capital. You said what, ma? 70%
Of 15 million.
is 30%, ma.
It's equity capital that will be 70%.
So 4,500,000 divided by what? 15 million. So the result will be what? 500.
30%.
30%. So class, any question? The assignment is let's go and solve. Let's go and solve. You solve this one first. Solve this one first. Don't just jump and go and. You need to have understanding of this, except you understand this before now. The assignment is the one with question 3. Omegweje Nigeria Limited is a trading company that specializes in buying and selling of bulk oil. So prepare a cash forecast for 2015, 2016, 2017. Prepare forecast of profitability statement. Determine and comment on the forecast liquidity ratio, current ratio. It's not far-fetched from all what we treated like this. So solve this again on your own. Then you move to this other one. Yes. Yes. Yeah, what is your question, ma? Madam Anna.
Please, sir, I did not get how you calculated for depreciation in the first profitability statement.
Okay, 20% of 5 million is what, ma?
10 million. Give us 1 million.
Okay.
So, in the first year, it was purchased in July, right?
Yes, sir.
So July to December is how many months? 6
6
months.
months.
So half of 1 year is 6 months. So since we are not charging full year depreciation, that's 1 million divided by 2.
Give us
We give
500.
you, we give you
Okay, sir.
500,000.
and we now charge the full year depreciation in the next year of 214, which is 1 million. Hope that is fine, ma.
Very well. Thank you.
Right.
Thank you, sir.
So
Thank you so much. God bless you.
We are really appreciate.
Which year is that assignment?
well, except I check, but if you have the past question, you can do a search. I will check and tell you.
Hello, sir.
Yes, sir.
I say the assignments given, sir. Which year is it,
I'll
sir?
check, sir. I'll check the year.
Thank you.
Thank you, sir.
So we're going to meet on Friday for financial management. And the next time we'll be meeting on this budget, we'll look at the issue of flexible budget. Flexible budget. I said budgeting is wide. Yes, so they can just come up in any way. So you must be prepared.
Okay.
Yes, you must be prepared. You
God
must
will
have an open mind. So as you enter the hall, once you see anyone, attack it sharp, sharp.
You'll be praying for
Yes.
us now. That God will grant us wisdom.
Yes, He will grant us wisdom. And that is why we are treating all these very fast. I don't want when exam is near, we'll start doing drama. I don't like those scenarios.
Okay.
So all these things are coming now so that you practice and be well grounded. Yes, those exam fire brigade, I'm not a party to it. Yes. So anything you don't understand now, you speak out. If I'm not chance, you get 1 or 2 persons that will explain to you. Yes. So you should be on guard.